You're watching Bloomberg Surveillance. I'm Mark Barton in London. So the European Commission is to discuss the legal and political tools it has to push Poland into scaling back a package of controversial legislation it believes is damaging democracy in the country. Following anti-government protests, President Duda vetoing two bills that aim to strip the courts of independence and hand controls to politicians. He signed a third measure into law. Poland's Deputy Prime Minister Mateusz Morawiecki is here on Bloomberg Television today. Thank you very much for joining us today. I mean, investors were relieved that President Duda vetoed those key parts of the judicial reforms a couple of days ago by the reaction in the bond and in the currency market. What's your take on that surprise decision?
Well, actually, to be very precise, the reaction of the bond market and currency market was zero from pre-veto and post-veto. There was a couple of groszy with a couple of cents move up and down, but actually nothing changed. My understanding of the whole situation is that like 80% of Polish society wants the judiciary system to be reformed, and in the World Bank doing business, if you strip out this report, there is also clearly, this is also clearly an Achilles heel of Polish economic and political system. The judiciary system needs reform. This one might have been more longer discussed with the president and should be based on more discussions, and hence the president vetoed.
So the next attempt to reform will look like what? Will be less contentious?
Well, the President Andrzej Duda vetoed this, and he now said that he will present the new legislation, and to overvote his veto is not possible in this parliament because it requires 3/5 of majority. So the previous legislation is kind of closed, and now the move will be made by the president.
The European Commission meets today. It addresses the matter, as you know. How important was the climb down in your relations with the EU?
Well, our relationships with the EU are not so rosy for over the last 18 months, but actually I believe that there was lots of misunderstanding in all of this. I know it's very difficult to explain in a couple of seconds, but everybody agrees that the post-communist judiciary system needs reform because there were not too much changes after 1989 when we have started transformation. Now the reform has to be cooked, has to be thought of by the judges, by president, by parliament, opposition parties, and we'll see what the next proposition will be on the table.
Are you ready to take measures in case market sentiment does turn against you? I mean, you said maybe there wasn't so much of a market reaction at the start of this week, but still, the zloty, whether it's against the euro or the dollar, you know, it's down 1% or so since the end of last week. Are you ready to take actions in case the market, in case sentiment does turn against Poland?
Markets and investors are, for me, critically important, and what I can assure you is that we do everything actually to make sure that the investors are happy. They are certain about our democracy, legal situation, and so on. Actually, the zloty, a Polish currency, strengthened us from the beginning of this year significantly. It was the strongest currency of all the emerging markets in the world. So there is a vote of confidence by investors. Right?
And you said in March...
I know you focused on this last week, but since the beginning of the year was really a vote of confidence.
Okay, and in March you told Bloomberg you're comfortable with the zloty in the 4.2 to 4.4 euro range. We're at 4.26 today. Yeah. Is that still your preferred range? Are you comfortable with these levels?
Yes, I would even expand this range from 4.0 to 4.50. This is where I'm still comfortable. If zloty is strengthened too quickly and too strongly below 4 zloty per euro, it would be dangerous for our exporters. But by and large, I'm actually in favor of strengthening Polish zloty, but not.
So 4.50 is the cap.
I wouldn't be happy to exceed this cap.
Let's talk Brexit. As you're here in London.
Brexit is an opportunity for us. For the last 12 months, we were very successful in attracting British investors, financial institutions into Poland. We have actually attracted 100,000 of new jobs and not all of them in back office functions of our shared services centers or business process outsourcing. Many of them in middle office functions like risk management, AML, data management. So I'm very happy.
Are we spending too much time on France and Frankfurt and Dublin?
Yes,
Should we be talking more about Warsaw?
We should be talking more about Warsaw, and we actually welcome all the investors in Warsaw and in across Poland. We have actually increased the presence of financial institutions over the last 12 months by 100,000 new jobs created by those institutions. So Warsaw is a fantastic place because the labor is very skilled, the people are very skilled. 40 different languages services are provided for all around the world.
And the UK is clearly a fantastic place because there are 1 million Poles here in the UK.
Yes, but we welcome them back. We would like them back to Poland.
But of course, you're still concerned about the rights of Poles living in the UK. How worried are you about the slow pace of Brexit discussions on citizen rights? Because there seems to be a bit of a stumble right now.
No, I believe that post the British elections which happened last early June, a couple of weeks ago, I think the situation will clarify towards not such a hard Brexit, which is in the interest of the UK, in the interest of EU, and in the interest of Poland. So I'm pleased with the recent changes.
So not a hard Brexit. What does a not a hard Brexit mean like 2 years down the line? Paint the picture for us.
I think less protectionism both sides in terms of trade, in terms of free movement of services, free movement of capital, and from the point of view of citizens, our citizens who came to the UK, I wouldn't be unhappy if they came back. So please give them back to us. We have the lowest level of unemployment over the last.
But that issue you think will be resolved this year?
I think this will be resolved, but this is not. This is for us really a serious issue. Shortage of working.
Is a potential drop in EU development funds because of Brexit and because of disagreements between the EU and Warsaw? Is that an issue?
This is not a serious issue from the point of view of macroeconomic environment and our major engines for growth, because our growth is very well balanced. It's based on investment and on exports. So export-led growth is very healthy. At the same time, structural funds have helped us to recreate our infrastructure destroyed in the communist times. So they are not. This is nice to have. This is not must-have for longer term.
So if exports are important for you, that means free trade must be important to you. How
free
close?
Trade is extremely important.
It is. So you disagree with Donald Trump, President Trump?
I actually had the honor to talk to President Trump and Wilbur Ross on his last trip to Poland, and I know that some of the statements which are in the ether, they are exaggerated. President Trump is for free trade and fair trade, and by this he means that with some countries like China in particular and maybe Japan, where there is huge imbalance in terms of export-import, there should be move towards more balanced trading relationship with them, which I agree with.
So you're not going towards protectionist policies for Poland? You're not pushing
we are
within
actually,
the EU?
We are more free market orientated because France has introduced recently Macron, Savary, reducing or weakening the already weak freedom to provide services, and we are actually. We have lost our allies. The UK was our allies in fighting in Brussels towards more free market regulations out of Brussels. So we are very unhappy with Brexit.
You're highlighting the economy. You've talked about unemployment. Let's talk about GDP itself and the budget. You said 3.6%. GDP. 4% possible this year?
4%.
What's propelling it?
4% was for the first quarter.
Yes.
Interestingly,
Can you do it for the year?
Potentially, our official forecast is 3.6 to maybe 3.8. We are conservative, but more and more factors indicate that there might be 3.5, 3.8, 3.9, 4%. For the first quarter, there was 4%. real GDP growth. And by the way, half a year ago, a couple of months ago, most financial institutions forecasted the growth for 2.5%. So there is a significant increase in all the forecasts across the globe around the GDP growth. And this is a very balanced growth.
Investment, though, is falling. It's fallen 5 straight quarters. We're talking about gross fixed capital formation here. When do you expect it to recover? I mean, why are companies scaling back CapEx? I mean, rates are at a record low, aren't they? So what's going on?
Next couple of quarters, we see significant increase in private investment, because this is, you're right, this was the missing link in the healthy private investment by small and mid-sized enterprises. Because foreign direct investment last year increased by 8%. A very strong increase last year. Bigger Polish companies, they have invested, but actually the bread and butter type investment, small and mid-sized micro enterprises, there was a reduction, as you rightly indicated, last year. But for this year, we predict 5 to 6% of investment growth.
Deputy Prime Minister, thank you very much for joining us today. Mateusz Morawiecki there, the Deputy Prime Minister of Poland. Right, Daimler missing on second quarter operating profit amid allegations it colluded with other